Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 26, 2026, and we're diving into Paramount's latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Paramount has released its Q4 2025 earnings, and there's a lot to unpack, from their revenue growth to strategic initiatives in streaming and content production.
Revenue and profitability overview. Let's start with the top line. Paramount reported a total revenue of $8.1 billion for Q4 2025, marking a 2% increase year over year. However, the operating income was a loss of $339 million. John, can you explain these figures?
Absolutely. The revenue growth was primarily driven by an increase in licensing and subscription revenues, particularly from Paramount+. However, the operating loss was due to $546 million in restructuring and transaction-related costs. On a positive note, the adjusted OIBDA increased by 51% year-over-year to $612 million, indicating strong operational performance despite the restructuring expenses.
Streaming and subscriber growth. Streaming continues to be a major focus for Paramount. Their direct-to-consumer revenue grew by 10% year-over-year, with Paramount Plus revenue up by 17%. What are the key drivers behind this growth?
The growth in streaming is largely attributed to the success of Paramount Plus, which added 1 million subscribers in Q4, reaching a total of 79 million. This was fueled by investments in premium content and successful launches like the UFC on Paramount Plus. However, the DTC adjusted OIBDA was negative at $158 million, reflecting high content costs, but there's a clear path to profitability as they continue to scale.
Strategic initiatives and content expansion. Paramount has been making strategic moves to expand its content and enhance its platforms. Can you tell us more about their initiatives and upcoming releases?
Paramount is leveraging its Paramount One initiative to amplify campaigns across its platforms, which has been effective with events like the UFC launch. They've signed new content deals with creatives like John M. Chu and Issa Rae and have over 15 films slated for 2026. Additionally, they're investing in technology to improve the user experience, which is crucial for sustaining growth in streaming.
Financial outlook and efficiency goals. Looking ahead, Paramount has set ambitious financial targets for 2026. What can investors expect in terms of revenue and efficiency?
Paramount is forecasting a total revenue of $30 billion for 2026, with an adjusted EBITDA of $3.8 billion. They're on track to achieve $3 billion in efficiencies by 2027, which will be crucial for improving margins and cash flow. In Q4, they reported a free cash flow of $101 million, indicating a solid financial position to support their strategic investments.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 22 cents, but the actual EPS came in at 52. What does this discrepancy tell us?
The significant miss on EPS is primarily due to the restructuring and transaction-related costs that were higher than anticipated. With only one analyst providing estimates, the forecast might not have fully captured the impact of these expenses. However, the underlying business performance remains strong, and the company is focused on long-term growth and efficiency improvements.
Key takeaways. In summary, Paramount has shown resilience with a 2% revenue growth and a 51% increase in adjusted OIBDA, despite the challenges. Their focus on streaming and content expansion, along with efficiency targets, positions them well for future growth. Thank you for joining us, John.
Thank you. Paramount's strategic initiatives and financial discipline are promising for investors looking at long-term value.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more insights. We'd love to hear your thoughts on Paramount's performance in the comments below.